And welcome back to the Localist SD. Is it true that investing in your 401k could make you a millionaire? Well, here to tell us more is Brent Wilsey. I am very excited to talk to you today because I feel like I'm not the only one that's trying to figure out their finances, their 401k. So break this down for us, because you hear millionaire and I'm like, sign me up. But what are the steps? How does this involve our 401k? Brent?
And it is kind of like, what? How can you become a millionaire with a 401k?
Yeah.
That doesn't seem possible. You put a few $100s in, and become a millionaire. It does take time. It is the right way to do it. But I mean, it can be done. And you're not alone. A lot of people don't understand them. They're afraid of them, and they don't do them, which is terrible. You can become a millionaire longer term by doing this. And actually, the big 401k companies, now 3% of their 401ks are $1 million plus accounts. And we have people that we've had for years now, they have in their IRA and 401ks over $1 million. So it can be done, but there's keys to investing properly and not trying to hit the home run.
Okay, so break it down for us. What's the steps of doing the 401k properly that people may not know? Because I will be honest, I wouldn't know where to start. So.
Well, let me point out too that about 86% of the $1 million accounts are for people that are 50 years or older. So this is not a get-rich scheme that's going to happen overnight. And actually, though, about 1,000 people per day do become 401k millionaires. So that could be you, could be anybody, but you've got to start doing it right. And the important thing is how to invest. Now, people many times invest too aggressively. And when you invest aggressively, yeah, it's great, and you might do well for 1, 2, 3, maybe 5 years. All of a sudden, you lose 50% of your portfolio. Like, oh my gosh, you panic, you sell, and you don't invest any longer. So you don't want to invest aggressively. But you don't be too conservative either, because too conservative, put it in the money market, it's not going to grow for you. So you want to be in the middle, invest in good, fundamentally strong companies or investments that will do well for you. Average 8, 10, maybe 12% over time. You will get to that $1 million account. Okay,
this is helpful because I think you're talking about aggressive and conservative. I'm definitely more on the conservative side. My husband's wants to invest aggressively. So
how do you? Perfect together.
Yeah, right. We're a good combo, but we have those discussions back and forth. So how do you find the happy medium? How do those numbers work? What do we need to look for?
Well, what you have to do is you have to find a good advisor, or you have to understand yourself, and you've got to understand the fundamentals of what you're investing in. Because if you just invest in something because it's going up, it's great until it falls, you don't know why. You've got to understand the fundamentals, or an advisor or broker can explain to you. Because the big thing that's going to happen is no matter how you invest, you're going to have down years. And you may lose 10, 15, maybe 25%. And if you don't understand the fundamentals of what you're doing, you're going to panic and sell. So you have to understand, are these good quality real estate, good quality investments, and I'm getting the rents, I'm getting the income, they're getting the cash flow. You've got to understand the fundamentals, because if you just bought something that goes up, you're going to panic when it goes down, which it will, and you're going to sell out perhaps at the wrong time.
Okay, this is what I want to ask you. So as far as looking at your whole salary or all of your income, how much of that, what percentage of that should be investing? Because I feel like a lot of us, we have a lot in savings. I am that type of person. I'm nervous to invest because I feel like it's a gamble. How much of your income should you be trying to invest? Is there a percentage?
The average salary in San Diego is about $73,000. You should be doing about 8%. And the thing too, the 401ks, employers many times match, about 90% of employers match what you put in. So if I told you there's a bank down the street that's going to give you 50 cents for every dollar you put in, you'd be, where's that bank? That's your 401k. So you should put in about 8%. If you get a 4% match, that's about 12% on $73,000 after tax, because there's a tax benefit to it. $365. The employer is going to put in about, the total is going to be $730. So after 30 years investing that per month, your account will be $1,347,000 at a 9% return. So, and that doesn't include that if you're making more 5 years, 10 years down the road, you should increase what you're putting in as well. But that's everything. And if you wait just 10 years longer, 25-year-old be 65, they'd have $3,443,000. This is all because of the magic of compounding. But you gotta stay the course. You gotta good quality investments. You gotta invest wisely is what you have to do.
So if you're not doing a 401k, I mean, you truly are just throwing away free money.
You're throwing away free money. You're missing the big boat, and it's not a get-rich scheme. It takes time, but I've seen so many people become millionaires by doing this.
Brent, where can people go for more information or just money tips from you?
They can always go to our website, smartinvesting2000.com. We've got a great newsletter they can sign up for. It gives a lot of great information. We do the radio show. We do our commentaries here. We do podcasts. We do many things to help educate people in San Diego on investing.
Awesome. I thank you so much. I will definitely be tuning in because I have more questions for you.
And sign up for your 401k.
And sign up for your 401k, all right? You've heard it here first. Thank you so much, Brent. Now, still ahead, pack your bags. We are going to Disneyland to celebrate the milestone event and snag some deals for California residents. Stay tuned. We'll be right back.